there, welcome to the video. I'm Scott Welsh, and as promised, I get together with you once a month to talk about the markets. Anything going on in the markets lately? It's the end-ish of April 2020, and a lot of stuff going on right now. Thought it was an appropriate time as people send you emails, as people do advertising, as people go on TV and tell you, just stick in there, just stick on in there with your buy and hold investments. I've seen a lot of those and I can't quite take it anymore. So we're going to talk about something they don't tell you on TV or anywhere else. So 3 things today, which you may or may not understand, but it's valuable. Number 2, we're going to talk about going broke. That's fun. 3, we're going to talk about being safe is not what is being told to you on TV and in books and in self-help webinars. And we're also going to offer a solution. I didn't put that on there, but never give a problem without giving a solution is something I live by. I am going to talk numbers. These are hypothetical numbers that are supposed to give you insight into hopefully helping your life. Please do not risk money you cannot afford to lose, and please do not buy and hold. Please do not risk money you cannot afford to lose. Okay. I'm doing a lot of reading. I don't know what you're doing in this little lockdown, but I'm reading at a rapid pace. Read many, many books, and it's been glorious. I love reading self-help books, even if I don't like them. As I just like being around people who are trying to offer solutions and trying to make us better. Getting to the point where I'm not learning a ton anymore, but I still like them, so it doesn't matter. All right, couple that I've read, not just one, but a couple of self-help books on finance have told us that index fund buy and hold investing is the best way to go. Academicians, that's a fun word to say the same thing. Index fund apologists / salespeople, again, been watching a lot of CNBC and for the most part really enjoying it, and for some part really getting angry. But they're all selling the same thing. Got a couple emails from a very popular emailer, millions on his email list, telling me the same dang thing. And then what are they telling us? Over the long term, the stock market is the best and only way to invest. And they say it in a weird voice too, which kind of annoys me. They also tell you the market always comes back. It always comes back. Go to sleep, America. Go to sleep, people all over the world. It's going to be fine. The market always comes back. And this is based on, as far as I can tell, biased research, pretty much cherry-picked, which isn't great when people try to sell you on your life savings based on research that is not thorough. Bothers me. And or a sales pitch. There's multiple trillions. What's the figure? It's over 5 trillion now, I believe. I've read 12 trillion. I've read 5 trillion. Trillions, plural, of money in index funds. Trillions. My brain can't even comprehend. You know how much a million is? A million's a lot. A trillion is incomprehensible. And that's how much money is in index funds. So if there's a sales pitch, it's worth doing because it pays off. And if these people are lobbyists or pressured by the people who paid their salary to get on and tell us things about index funds, it makes sense. I'm not a big doomsday conspiracy. I like a good conspiracy that's well thought out, that makes sense, in which case it doesn't become a conspiracy, it becomes a plausible result type of thing. But it's not a stretch to say or to see how someone might want you to keep in your index fund if it's making them a lot of money, despite any other research, okay? Or maybe people are just ignorant. Maybe someone, there's a lot. As a tennis pro, most instructions that I've found that are spouted off to students are just based on something they've heard before. Right? Just something, I heard it, so I'm going to say it back. I don't really know why I'm saying it. I'm just saying it, right? And that goes from parents to children, from coaches to students, and from financial experts to us. Maybe it's just ignorant, in which case I guess they're not guilty of something nefarious. But anyway, we're going to talk about what they don't tell you, but first we're going to talk about what they do tell you. And here's the scenario. Again, multiple books. I'm not cherry picking this. This is what I've read multiple times. If you want to become a millionaire, or if you're a millionaire, even more so, but if you want to go from nothing to a millionaire and significantly change your life, save your money 10% a month. It's, start with 1%, go to 10%. Good advice, right? Nobody saves, right? Very few people save their money. Everyone who does save their money seems to be better off. I mean, it's good advice. And here's then where they take a wrong turn at Albuquerque. Then they say, okay, well, what do I do? I've saved 10% a month for years. I've done my job. What do I do with that money? Does it just sit there? No, 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 say the books, say the experts, say the people on TV. You need to invest that money. That's where the real smart moves and the intelligence comes in. It's investing that money you saved and invest it at 10% per year. That's what they say. I didn't pull that figure out to try to make a point. I read it multiple times, multiple books. Okay. If you save 10% a month and invest it and make 10% a year, it really doesn't even take that much, right? You are a guaranteed millionaire anywhere between 5, 10, 15, 20 years, depending on where you start, right? But it's guaranteed. It's the Millionaire Maker Strategy Incorporated, right? Go read, go look up books that talk about making you a millionaire and then see what they tell you. It might be similar to this. Okay, but then you should be thinking, as I did, well, where do you get 10% returns? And they've anticipated that, these smart people. They know that that's what we're going to say. And they just kind of pat us on the head and say, you get it from the stock market. Gasp everywhere. Because you know what, silly investor? The stock market returns 10% per year on average forever. That's it. And we're like, whoa, does it really? Just put it in the market and forget about it? Save my money and put, wow. Let's take a look, shall we? Let's say we follow this advice, which seems like very good advice, and an innocent trader, right? And I say innocent meaning, listen, I don't know what to do with my money. Please help me. Okay, so it's an innocent, and these are the people that get hurt, and this is what makes me angry. Innocent trader investor follows orders and saves up money, 10% a month, and eventually they get to 200,000. Okay, nice round number. Yes, it's not 2 million. They'd probably say to save more, forget all that. Let's just stick to the example. Okay, $100,000 is something that we could get to, right? Even people making, normal wages, like under 70,000. I think that's the median or something like that, or maybe that's a high end. Maybe it's 49,000. Doesn't matter. People making regular wages can get to 200,000 if you start saving. Might take a few years, we can get there, right? So instead of going for a million, which we'll never get there, we're going to 200K. And while they're saving, the innocent investor keeps knocking down their monthly budget, knocking it down, knocking it down. And finally, they pay off their house or they rent or whatever they have to do. Don't rent. Oh boy, sorry. Someone just slapped me in the face. Don't rent, but they find a way to get into real estate and their expenses and everything else gets down to 1666. I know that's low, but this is a very frugal investor, okay? So 1666 is 20,000 per year, and that covers everything, okay? Again, very frugal, live in a very frugal part of the country or the world. Okay, you see what we've done here? We were told that we can get 10% per year from the stock market, right? 10% per year from the market if we just keep saving up our 10%. So we've done that. Do the math. We're done. You see that? If we make 10% per year on our $200,000 nest egg, that will pay us on average $20,000 a year in profits. 10%, right? Just move the decimal place one spot. Great. We can retire. We're done. We followed the rules and it's worked perfectly. I'm quitting my job. I'm giving them the middle finger, and well, don't do that. That's rude. That's it. See what I'm saying? We've done it. We've done everything we're supposed to do. $200,000, 10% of the nest egg. Nest egg never goes down because we just, whatever the nest egg throws off, we use for our expenses. Nest egg stays the same. Expenses are paid for life. We can retire. And again, in May 2019, there was over 4 trillion in index funds. I've read it's higher than that. Okay, done. Well, let's look at it, shall we? If the stock market goes back to its 13-year average, which is 8.13%, I've done the math. I'm not listening to anyone on that one. I've done it, so heck with you and your figures. But some say, if they're fudging, they say 10% per year since 19 whatever, 100. I don't know where they get their fake figures. This is what the market has actually done. 13 years has averaged 8.13. Not quite 10, but heck, it's close enough. I'm still retiring. Okay. And let's say we started in 2018. That's only a couple years ago, right? Well, I only went back a couple years so we could bring it up to speed in regular day. Okay. Ready? In 2018, we saved our nest egg and we're all set. We retired. We quit everything. Well, in 2018, if you recall, the market didn't do so great. That's the actual return of the 2018 market. We didn't make our 20,000. That stinks. They didn't really tell me about that, but I still have my $20,000 of expenses. So my nest egg has gone down 12, and I've paid out 20 because I had to. I retired. So now I'm down to 167. Okay, but the market always comes back. In 2019, we know the market was awesome and it made 32.33%. This is the S&P. Our profit, even on our lesser, our profit was 54 grand. That's more than we need. This stuff works. I'm going to build an email list and tell everyone how great it works. Expenses are 20,000. We pull those out and we're right back to our nest egg. This system works. Blank yeah. 2020, when I did this little spreadsheet, the market was down 11.8% after a big run up. It's now down a little bit more than that, although it's up as I'm speaking to you right now. But it's down. So let's just say it goes back and forth for the rest of the year and it just ends here. It could be a lot worse, right? Could be better. Could be a lot worse, but we're saying 2020 ended right now. Okay? So we got that. That's our profit. No, it's not profit. We still have our expenses. Oh man, we're doing this again. And now we're down to 157. Let's say the market doesn't stay down. It goes right back to its average, just like promised. Okay? Okay. So in 2021, it makes what it's supposed to make. We make profit, but it's less than our expenses. Account nest egg goes down. It does it again. The market performs exactly as they say it will. Probably won't, but exactly. But you notice something here? Our profits go down because we're not making enough money. We were promised 10 and we got 8. And if we just put our head in the ground, like the experts tell us, we lose all our money by 2034. The market, for almost all of that time period, does its average, does what it's supposed to do. Probably won't. But even if it does, with 3 years of actual stuff happening and recorded, we are dead broke 2034. What do we do now? Who is telling us about this? Okay, that's frightening, but I'm not done. Does this market remind you of 2008? Huh, it does to me, and it does a lot of other people, not exactly, of course. So we start in 2018, there's the same thing. 2019, there's the same thing. But in 2008, do you remember, the market was actually finished down 38%. Not what I had on the previous slide, right? It actually finished 38, which we could this year too if it's similar, correct? And then it bounced right back. Market always comes back. And it bounced right back. The market always comes back. And then the year after that, so this is 2008, 2009, 2010, 2011. It kind of falls off by then. And as you can see, if it follows the pattern of 2008, we're broke by 2029 in this particular example. Again, just going by, these are not what the average, these are what it actually did, and then it went right back to the average. Again, a lot of suppositions here, but isn't it interesting? You can see that this was real life stuff, and this is what actually happened previously. And if all of that goes together, again, not fanciful, going right back to the average, we're broke by 2029. So that didn't work. Oh, this is similar to the dot-com crisis. Okay, 2018-19, the same. This is what happened during the dot-com crisis, 2000, 2002. You remember that? Does anybody even care? No, I don't care because I'm going to buy an index fund. Great. It was down 3 years in a row, by the way, just throwing that out there. Then it roared back. The market always comes back. And then let's assume it goes back to the average. If it does what it did in 2000, 2002, we're broke by 2028. Again, just getting hammered with real life badness takes this into zero. Oh, and have you heard people talk about the Great Depression, right? Unemployment. If the unemployment in the US goes where it's been going, I mean, that's depression levels, right? I don't think we're going into a depression, but we're probably going into a recession, right? At least, but let's say we do. Remember that, right? Here's 2018-19, and then here's what happened, 1929, 1930, 1931, 1932. 4 straight years. Anybody remember this? Market doesn't always come back. These are real figures. Where is the market always comes back here? Where is it? It's nowhere. Wait, no, it did. It always comes back, right? So 1930, what? 29, 30, 31, 32. So 1933, I believe, came roaring back, and we still went broke. Did not help us, not one single bit. We're broke by 2024 if our current market decides to be down for multiple years. Okay? But I followed orders. I mean, what are the people on TV going to tell you if you buy and hold and we see something like this, right? What are they going to say then? Going to send us an email? Just stick it out. I know you're broke. You've lost $200,000 investing in the market that always comes back. Can we do anything about it? Sure. This is a free system. Talked about it in my newsletter. This is a 40-day breakout trend following strategy. That's it. Okay. So on 9 futures contracts, I've written about it. I've given all of them whatever, right? This is free. A free system. If price breaks above the 40-day high, you buy it. If price breaks below the 40-day low, you sell it. You use a trailing stop, and that is it. A free trend following portfolio. You can basically take what I just described. There's a hard stop of 1 times the ATR, by the way. I mean, that's a system, right? Similar to the turtle system. Go to 40in20out.com. I've talked about it before. They're doing an academic study. They give you the rules of this particular portfolio for free. So this isn't something I made or nothing I'm selling you. This is a free breakout strategy. This is what this strategy on 9 futures contracts did in 2018. That's what it actually, well, I can't say actual. So that's hypothetical. You hear me? Hypothetical, I didn't trade it. Hypothetical, I didn't trade it. It's soaring in 2020 as I speak to you. Why? Because trend following loves when markets go haywire. And this particular portfolio over the past, 10 for 13 years has averaged 17%. That's what it averaged. There are losing years. This isn't the perfect system. It's just a basic breakout system. Definitely have losing years, but you definitely have huge winning years. And again, you'd have to get the trade size. I get it. Don't go crazy. This is using just regular money management, buying 1 contract for each. This is as simple as I can get it. Again, nothing for sale here. Okay. But if you use a trend following portfolio on 9 futures contracts, instead of buy and hold, you can see that your 200,000 turns into 4.1 million by 2030. Okay. This is just, it's not even mine. See what I'm saying? It's a portfolio of a trend following system, not buy and hold, not put your head in the sand. Trade, have a system, and now you're a multimillionaire, right? Just using this particular portfolio. Take your losing years, whatever. You're going to have 30% up, you're going to have 20% down, blah, 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 right? But this is a little bit different, isn't it? Right? Again, just trying to show you some facts and figures. Okay. What's the solution to this problem? Don't buy and hold. Use a trading system. You know how many examples I could give you? I could give you so many examples for free. Systems that I've built, systems that other people have built, the original Turtle system. They're so different. Forex, stocks, futures. Just use a system. Why are they selling buy and hold? Okay. A system beats the market no matter where you start. Okay. You want my sales pitch? All right. Well, this is a robot that I'm currently trading. Right? These are the hypothetical returns, blah, 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 although it's not hypothetical. I'm up 40% in 2020. But anyway, let's say I'm not, because this is the euro yen, all right? Let's say I'm not actually trading it, which I am. That's what it was up when I wrote this. It's averaged 30% per year for the last 10, and 200,000 turns into 661 by 2024. Again, that's just a robot. And what kind of robot is it? Oh, trend following. And a big surprise, right? Just a simple breakout strategy, right? Bottom line is this, right? I understand you might get furious. You could have more than 200 saved up. You could have started in 2016 or 17 or whatever, 2009. It would have been perfect. I get it. I get it. But you understand? I'm trying to show you the danger. I just went back 2 years. This could happen again. It can happen anytime. And I could show you multiple examples where the stock market has dropped for multiple years at a time. And if you happen to start then, unluckily, you'd be screwed over, right? Nobody is saying this. And furthermore, even if you're going to fudge this, fudge that, and even if the trend following numbers are nowhere close, clearly a system wouldn't have lost to 200,000. Maybe it wouldn't have gone to 4 million, right? You can complain if you like, especially if you, I don't know why you would complain. Why not just take the information, okay? But you're surely, according to those numbers, even if they're close, you're not going to lose the 200,000, right? Believing in buy and hold can lose everything. Believing in a system can not only save your money, but could be exponentially better. I mean, that's the takeaway. And that's what makes me angry. And that's what no one's talking about. And it should be. Okay. All right. That's all for now. I'll be back next month sometime or even sooner if something makes me angry again. Hope you're doing well. Stay safe. Stay healthy. Bye for now.